Does your serviced accommodation qualify as a furnished holiday let? Let's have a look at the rules today. I'm Kimberly Shapcott, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. Serviced accommodation is a great strategy. It's slightly more labour intensive, but there is some tax benefits and some different options available to you that are not available to anyone in any other sector within the property industry. Now, this is because serviced accommodation is treated as a furnished holiday let, as the name suggests, you're accommodating with services. Now, that is great because you get certain benefits, and these benefits include things like you get certain capital gains tax reliefs. There's things like entrepreneurs relief. There's things like rollover relief. There is things like business asset relief, which I'm not going to go into today. Today we're just going to concentrate on whether you actually qualify as a furnished holiday let or not. The other things that is the benefit of being a furnished holiday let is things like you can claim capital allowances on your assets, which no other property strategy allows you to do. So on that basis, you've got this benefit that you can be claiming for those beds, those other things that others cannot be doing from day one. And the final thing is that the profits count as earnings for pension. So it does allow you to make additional pension contributions if that is a route you're looking at taking. So with some of these extra benefits with this strategy, let's jump into what you actually need to be doing within that furnished holiday letting or serviced accommodation business to actually qualify for some of these benefits, which may become quite useful in the future as your business develops. Now, the starting point for all of this is the first two things, which one of them is it's in the UK or in the EEA, and the second is it's furnished. So two quite simple rules. So this is it either will be or it won't be, quite easy to count. Now this moves us on to the next rule, which is you must be commercially letting it. So if you have a property that you are letting out, let's go with in Cornwall, and you let it out for the majority of the year or it's available for letting, then this is being commercially let. You're advertising on things like maybe booking.com or Airbnb and that sort of website, and you are trying to let it out as a furnished accommodation. And this would therefore qualify. But I'm not just talking holiday locations, this could be anywhere in the country because you might have business clients, you might have individuals wanting to go visit a particular city. So it can be anywhere in the country. The key things are in the UK, it is furnished and you are letting it commercially. Now, unfortunately, it's not just that simple. We now move on to the slightly more complex area of this topic, which is how we have to count days and look at different options. So let's jump on to the next stage of what the rules entail, which is more about what actually happens and what you're actually doing with that property. One quick thing to note before we move on is that depending what type of furnished holiday lettings you have, you will lump them all together as the same business. Now this is great when we come to something in a moment, but if you do have things in the UK or outside the EEA, you do need to separate those as two separate distinct businesses. But that's just a slightly quirky thing. I'm guessing most of my audience today is probably mainly UK based with UK properties. So all of those would just be lumped together as one furnished holiday lettings or serviced accommodation business. The next conditions look at occupancy. So there's three rules within the occupancy element. And that is the first one being the pattern of occupancy, the second being the availability of letting, and the other one is the actual letting history of what has actually happened. So let's dive into those on a one-on-one basis to see what are the actual rules in these areas. Now, the first one is the pattern of occupancy. And what we mean by pattern of occupancy is that it isn't actually a residential let, that we are doing it as a furnished holiday let, which means we can't be letting to the same person for more than 31 days. Now, every so often, there might be an occasion where you do, and that's not a problem. However, you aren't allowed to let on a longer term let for more than 155 days. in a tax year. So tax years, we're talking the 6th of April to the 5th of April each year. So in that time period, you might have one that is maybe 40 days that someone stops with you, but you can't have it that you have 3 months, 3 months, 3 months. That would be over the requirements for the pattern of occupancy. And the intention is not therefore furnished holiday lets, it's more longer short-term lets that are happening. The next condition is the availability condition, which is all about how many days it's actually available for letting. So this needs to be at 210 days or more, which is around 9 maybe months of the year that you've got to have it available. One key thing to mention is that you don't count any days that you're at the property because they are not allowable and they don't count towards it being available. The letting condition is the final condition that we're going to talk about, and that condition is all about how many days you've actually let it. So you had it available for 210 days, but how many days did you actually have someone in that property? And the number of days that we need to be qualifying in this time is 105 days in the tax year. So when we've hit the 105 days, we've ticked the box for furnished holiday lettings, and that would treat us in that guise. Now, obviously, there is a few additional things in this area because you might have it available for the 210 days, but you might not let it for those full days. So let's have a look at a few of the allowances available to just say this is what can happen if things aren't quite fully met. Now, there are a few concessions and a few things to be aware of. If you are letting things out to family and friends and not doing it on a commercial basis, then those days get discounted. So this is where we start to see those 105 days become quite a lot of days if you're not letting it for the full year and if you are letting friends and family stop in the property. The other thing that is discounted is also any longer term lets. So if you do let it out for 60 days to one person and it becomes an over the 31 days stay, that gets discounted from that 105 days as well, because that's not treated as a furnished holiday let day, that's a longer term residency. So there is a few things here which might have an impact on the number of days that you're actually letting that property. But don't worry, we do have a couple of things to help us in this guise. Now, one thing to probably just note is if you have someone who comes and stops for maybe 25 days and then unfortunately they get ill. Now, obviously in recent times we've had things like COVID, so people who were planning to leave may have not been able to leave and have actually stayed longer than 31 days. Now, this is an unfortunate circumstance and they do allow for this. So the intended period that they were booked would still count towards the furnished holiday lettings limit, and the fact that they've overstayed is due to an unforeseen, unusual circumstance rather than the intended use of the property. Now, if you haven't been able to let the property for the 105 days due to whatever reason there may be, then there is two things out there to help us. Now, the first one is the averaging election, and the second one is a period of grace. Now, let's start with the averaging election, and this only works if you've got more than one property. Now, this is all to do with I have 1, 2, 3, maybe 4 properties, and over the 4 properties, I've got some that have done really, really well, and others that haven't hit the number of days. So I might have one that's 200-300 days that has been let, and one that's at 50. Now, the great thing about this is I can average out the number of days over the properties I've got. So I count how many properties have I got. So let's go with 3. I've got 3 properties, and over those 3 properties, the number of days that it's been let is, let's go with a number I can divide by 3, 375. So that works out at 125 days per property. Now, I might have one property that only had 50 days, but I've got another property that had 200 and something days. So overall, the number of days that have been let to each property can be averaged out to over the 105 days, which means all of those properties would be categorised as a furnished holiday let, and all the different reliefs that that entails would be available to me and to those properties. So this is really a great election for anyone who has a couple of properties where one might not be doing so great, but others, they're doing okay and they're carrying the others. And obviously over periods of time this will change. Now, to do the averaging election, you can put that on your tax return when you do your numbers and send that in, or you've got 12 months after the 31st of January to make that election to HMRC, which then would keep that property as a furnished holiday let. The other alternative is something called a period of grace. Now, this is available if you've genuinely tried to meet all the conditions. So you have had it available for let for over 200 days, 210 days. You have got that pattern of occupancy, so you've not had lots of longer term people in, which means it's not actually available for the 210 days. But having tried all you could, you've advertised it, you've put it out there, you've just not hit those 105 days. Now, at that point, you're like, well, what can I do? Now, there is this period of grace. So if you've put all your efforts to try and get it full, now, obviously, things like the pandemic have caused periods of unlettable periods. So it was available for let, you've done everything you can, but you didn't have anyone in, which may have impacted the number of days that you've hit. Now, in this time period, you would be able to use the period of grace approach. And HMRC allow you a period of grace, so it's still classified as a furnished holiday let, but you've not actually formally ticked all of the conditions. One of the key things here is that you've got to be able to show that you have been making your efforts. So if you've had it available for letting on booking.com, on Airbnb, any of these different things, if you've got it on your website, you've been doing Facebook advertising, and you've actively been putting it out there, then this would all indicate that you have been genuinely trying to get lettings and get bookings on the property. Now, for the period of grace, you can have up to 2 years period of grace. Now, obviously, this isn't great for a business model. You want to be getting the property let. But if there is a lull in trade, an issue, something happens, we've got flooding in different areas of the country and things like that, so people aren't travelling to the area where your property is, then hopefully these period of grace will just give you that leeway to keep things going. However, unfortunately, if after 2 years and 2 periods of grace you haven't been able to get it let and ticked all the conditions, you can't keep going on a period of grace. This would then not qualify as a furnished holiday let. So it's great when you have unforeseen circumstances and things are out of your control and you're just not able to hit those days, but it's not an ongoing thing. So great for a short-term period, but you do really need to be concentrating on getting those rooms let for tax purposes, but probably also for your benefit to get the income from your property investment. Like with the averaging election, this can be done on your tax return, or you can make an election separately after the 31st of January for within 12 months of that filing deadline as well. So there's a couple of options there. The main one is probably on your tax return as you're reporting your income, and then it just sits there going forward. The one benefit is you can use both elections if you need to. You can use the averaging and you can use the great period of grace over that period of time to maintain that furnished holiday lettings categorisation. Even if you can't let the property for a period of time due to unforeseen circumstances, you would still be able to claim the expenses back as part of that tax year. Now, the one prerequisite I would probably say on that is that if you're the one living in the property or visiting, those expenses would need to be deducted. But if it's just closed for whatever reason because there isn't any lettings available in that area, you would still be able to claim the expenses for that property as it's still part of the business and the intention is probably still to let it. It's just not a season that you might be able to let it, especially if you're on some sort of park where they maybe shut the park for a couple of months each year through the winter or such like, so that you can claim all the expenses that you may be incurring in that time frame. As you can see with all these rules, they're not the most onerous or complicated rules, but there is quite a few that you just need to tick. If you tick them all, it's very straightforward. If you're about there, you just need to see what you can do to make sure that you keep that categorization. Obviously, if there is periods where you have a few difficulties, there is a few things there to help you to keep it qualifying as a furnished holiday let. But definitely something to just be aware of, keep up to date with, maybe put it on your spreadsheets or your data so that you know whether you are ticking the boxes or not, and then enjoy the fruits of your labour with your business. Hopefully today you've discovered whether your properties qualify as furnished holiday lets and whether you can get those special treatment for this type of property investment. If you do have any questions, please do leave one in the comments, and we'll answer as many questions as we can and add some extra videos depending what will work and help you. Please subscribe to the channel and do like this video and share with anyone else who's doing a serviced accommodation strategy. Let's make tax less taxing. Let's make tax less taxing.